Good morning. Can I get a quick sound check, please? Okay, we're good. Thank you. All right. So we've got a pivot. They were hanging around there early on. They've chosen to get below the pivot, and they're approaching really the first place, 416.50. Now it's a give or take. We know the routine. Yesterday's low is over here at 417.35. All right. With that being said, we've got the spike the low and rip it back up in the other direction on the docket. We also have something that I posted on Twitter this morning, which is, and I use the ES for this one, which is we've got symmetry in the making, and they're down completing the general zone of where this symmetry ends. Down move, wedge, down move. Okay, we talk about it in the videos, it's taught in the class, lazy E-mini trader, the whole 9 yards. Okay, so this isn't new stuff. So there happens to be a number just in the vicinity of where that symmetry ends. So whether they get to the number or not, and they just do the spike to low, come up short of the number and rip it back, somewhere in here, there's going to be support, and they're going to rip it back. May take a little while, may happen right away. Maybe the buy the dip crowd steps right in, the pajama jockeys, that's possible, or they stay down here for, half an hour, 45 minutes, an hour, whatever it is. That's possible too. Below 415.25, let's call it below 415, it starts to smell and we don't like it. That's the other side, just so you know, as a just in caser. You got to have both sides. You got to adjust your risk accordingly. If you're a one trick pony, one contract player type of situation, one entry, very hard to buy the top of a zone. But if you're a multiple entry type of person, type of trader, then you can buy the first, in front of the first, the spike the low, rip it back, and then another, 2 times, one in between, one down here. All right, that's kind of the way I like to do it. That's the story. We've got a little handful of stocks on the move. I got an interesting one. I don't want you to do anything with this. I just want you to watch it. I'm kind of testing the number here. Avago was ripping higher. It was over 700 this morning. I've got a number. Let me get it for you. Hold on. Okay. 709.11 to be exact. Okay. Yeah, it's a give or take. It's a big stock. All right. 709.11. That should be overhead resistance, but understand this, it's just a number, doesn't mean that they can't spike it, but that's a number that should be overhead resistance, whether it's intraday today or tomorrow, the next day. It's a number that they're going to come back to. Call it a pivot. All right, it's not a pivot, but call it a pivot, kind of like we treat pivots. Just interesting to say, just watch it. Be interesting. Somebody let me know if it's up there later. That's it. We got a minute to post time. All right. What's the low here already? The low was, where am I? There. Low, 416.91. So they're already trying to get you to believe they're going to spike the low and rip it back. Maybe they get to the number, maybe they don't. I don't normally say it that way, but call it an intuition, call it a funny feeling, call it a non-technical inside my head type of reason. All right. We'll see. We'll see. All right. They're almost off. All right. Just let them open up, let them do their thing. Drill it down a little bit. Doesn't really matter. You're looking at numbers. I guess my point is, could 417 be support? The spike of it, like right now, it can be, and it's not that far from the first number, but the first number is the first number, and we'll leave it at that. Sometimes they come up short, and today's one of those days where I got a funny feeling.
ZM
Plus, the bottom line is there's a lot of support in here.
ZM's actually now down towards the third entry. Now ZM is below the third entry.
$66 in ZM will be another place. There goes Avago. And there's your rip it back up in the other direction by coming up short. That's what I was talking about, right? Yep. No, Russell's flat on the day, which is relative strength. So anybody jump in early? Anybody kind of read the writing on the wall? Anybody read between the lines? Yeah, I figured. And there you have it. That's the scalp with potential. So that's trader's choice for those that were in early that understood my commentary. Without telling you what to do, I told you it could happen, and some of you took it. Nice job. Here you go, Armand. You know what? I didn't do the, oh yeah, I did. They're good. Let me just take a look at ZM. Yeah, I did. It was 66.10. I told you 66. The low was 65.91. Let's work backwards. Let me go back to the cues for a second. Yep. IWM, just double check. That's going the other way. Just in case. So what I said earlier, let's get back to the spiders for a second. So what I said earlier is, oh, I'm sorry, Armand, just give me a second. I didn't see the rest of your question. Well, up here, as long as you can ride it. They got to stay above, just call it, they can't close candles below low of day, because that opens the door right here. Or even, you don't want them down there. If you're long, you're just riding the remainder at this point, I believe. There's nothing really before yesterday's low, which they've already kind of run a test of, just below 337. That's another one. Okay, let's get back to the spiders for a second. So what I said earlier was they can do both. What that means is they can spike the low from yesterday, rip it back up in the other direction, and then come back down and do the 416.50. That would be, again, another spike of the low and rip it back up in the other direction. They could still do that, right? It's 10 minutes into the day. All right, let me just say a couple of comments. We got a couple of new folks in here today. It's not a rah-rah place. We're cool, calm, and collected. We're waiting on numbers. You heard the early commentary about the, come up short routine. Traders that have experience and can kind of read between the lines of what I'm saying without saying you don't have to wait for the number. I said you don't have to wait for the number, but you have to have the confidence and the understanding of how this works in order to read between the lines and in order to do it properly and understand where you're wrong and be willing to buy lower if in fact that was wrong. So some traders did that and they were rewarded. And now what we're doing is we're waiting for the market to do something where we want, not necessarily looking for the next trade. We have to be in a trade. We don't have to be in a trade. Our objective here each and every day is to be in 1, 2, 3, sometimes we get it more than that, quality trades that give us the thing. The market's open all day. We don't have to shop there all day. It's like a store, right? We just need to get what we need and get out, go back home. So it's just a concept. I'm your alter ego. I'm going to tell you a lot of things just to rewire your brain. This is for everybody, not just the new folks, obviously. But I'm going to tell you things to rewire your brain to think properly about how the market actually works and how this trading business works. So just stick around. Be patient. That's the underlying foundation of what we do. We have to be patient. If you're patient and you listen to what I say, your results will skyrocket. You'll stop doing stupid stuff. And I'm not saying you individually do stupid stuff. I'm saying we all do stupid stuff. We're going to minimize that. We're taking away variables. Look at the cues. Good job, Armand. So they're coming up to that next area that, it's overhead resistance. Doesn't mean they can't get through. Doesn't mean they won't, but they stall out right there. That's the reason. That's that place right there. Yesterday's low. So they're almost there. Came up just short. Yeah, it looks like we got some data rolling out. A few minutes, 10 o'clock. Yeah, normal stuff. It's not a big deal. Sometimes it jolts the market. Sometimes the market moves and that becomes the reason. The data becomes the reason. If the market doesn't move, nobody pays attention to the data. It's in reverse order. It's less the data is waiting and then we're expecting the market to go up or down. Some people are, but that's not the way it works. We're just aware that there's data being released, and if the market jolts a little bit in one direction or another, we have the numbers that matter to us. And that's really the only reason that we are aware of it, because it's from a timing perspective. Like, we want to be looking at the tape around that time to see if they're getting a jolt to be headed to a specific place. We don't care what the reason is, or the excuse, I should say. It's not really a reason, it's always an excuse. Welcome, Trevor. Just be patient. I'm not saying you're not, I'm just repeating it for everybody's purposes or everybody's benefit. So they're stuck in the mud, right? No big deal. They're going to do one thing or the other. They may eat some time off the clock for a while. And while they do that, we don't have anything to do but watch it. We're spectators. Get a different look, see what's going on. Hourly chart, you've got your symmetry. That was the point, right? You know, if I just draw it like this, it's a rough draft, right? But it goes like this, and then it goes like this, and then there's about an equal one in this direction. And that's pretty much what happened this morning. And that's the reason, hence the reason, that I had all that to say about that this morning. And that's exactly what happened. It just was a stretch to get to the number from a symmetry perspective. Didn't mean they couldn't, but it meant they might not. And that's the way I took it. And there you go. So we got some long riders in the spiders right now. Trailers. Yep. Good job, Ron. Yes, sirree, Bob. But Mike. Yes. Joseph. We got him. Yep. Nice job. So we got some profit takers already. We've got some trailers. We've got something for everybody as usual. Be back in a moment. All right, here's the situation. 417.25 is support right now. All right. If they get below that, it opens the door for the lows and maybe 416.50. That's one side. The other side is above 417.25, and they're working their way up to 418.65. What's that? That's the pivot. That doesn't have to be the end, and they can come up short and pull back, all that stuff, but there's a gap just a few pennies above. Either way, that's the first real place that the magnet's going to draw price the closer they get, and they could take a while to get there. It could happen quickly, it could happen over a couple hours, but that's what they're working on. Those of you in the KRE swing trade, it just hit first target. All right, just hit first target. So 41 bucks is first target. The rest is trader's choice, free ride. Have a nice day. Ended up to be 65, convergence of moving averages in the hourly chart, but 69.40 is the other number. I don't know if anybody's in this. Nobody said. This was the first number because this one was off the table because they opened below. Oh, wow. Nice, John. Well, where's your first exit, John? Unless you've already taken it. Look at that. Yeah, we got players in Zoom. Nice job. And most of them bought real low. Well, how about 76, 67, 68? Don't those numbers on the way back generally become resistance for a while? If not for a long time, we don't know. But a lot of times they do. So I would take an exit there. That's what I would do. You do what you like. Let's take a look at NEM. What do we got in Newmont? Well, hello. Had the number. Had the number. Don't know when I put that on the chart, but I had the number. A little late, sorry. Let's look at Zoom. See, it came up short of that so far. It doesn't mean they won't get there, but it's wild. You know, Zoom is volatile. That was another good example, and this is specifically, well, it's for everybody, but it's specifically for the new folks that haven't heard this before. I give you the numbers, right? Whether it's in the spider, a stock, anything else, it doesn't matter. I give you the numbers that make sense from the way I do my work, the math standpoint, what I see on the charts. I give you my numbers, okay? And traders choose how they use my numbers. So for example, Zoom selling hard, it blew through, you know, opened below the first number, it starts to blow through the second. A lot of traders in here say, all right, well, I'm looking to get long Zoom, but I'll just wait for my price. Maybe my price is when I said 66. Maybe my price is the convergence of moving averages, which I didn't tell you about in advance, at 65, okay? Or somewhere else, doesn't matter. And then what we do is we end up doing what we're comfortable doing, which enables us to get in a comfortable trade, not an emotional roller coaster trade because we just willy-nilly did it. We do what we're comfortable with, which allows us or enables us to stay in the trade when we're in an uncomfortable trade. I don't want to be in this trade. You're looking for an excuse to get out. So the minute it comes down a little bit, you're saying, all right, it's wrong, I'm done. And I want to cut the pain. I don't want any more pain because it's emotionally taxing for me because it was uncomfortable. When you say, all right, I'm going to buy a spike of 66 and I'll even buy down to 65. And they start getting down there, and you see it start to bounce. Well, guess what? Now the market actually confirmed that you had a good price, therefore you were correct, therefore you have a comfort level, which is different than anxiety in the trade, enables you to stay in the trade longer. It's part of the psychology of trading. If your subconscious is looking for a reason to get out, you're going to get out. And whether it's too early or it's with a small loss, you're going to end up getting out because you don't want to be in it. Pardon me, you don't want to be in it any longer, subconsciously or consciously. And you need to write that stuff down so that you remember to look at it, to reinforce it for yourselves, because it's very, very important. It might seem nuanced or it might seem ridiculous to some, but I'm here to tell you it's not. That's fine, Mark. Well, the third number in Zoom was 66. Oh, I see. In other words, you figured a spike of 66 was going to bounce anyway. It's a good plan. Let me look around the horn, see if we have anything else going on. Let's see what happened here. No, they didn't get there. They came up short of 700. Look at that pullback. Okay. Nice job on Zoom. A lot of you made some money on Zoom. That was nice. I'll be back in a minute or so. I got to take a phone call. Sorry about that. While I was away, well, I wasn't really away. While I was on the phone, I was looking at the BJ's. It's coming down slowly, but keep that one on your list still, because that could get there. You never know, right? It's not that close, but it could happen. So just keep that on the radar screen. So the whole concept was, what are they going to do? Stay above 417 and a quarter, we're talking spiders, and they begin, and this is what I wrote in the notes, they begin to work their way up to 418.65. Sometimes they'll come up short, spike it through. Either way, that's the concept. We don't have to worry about whether they're going to, pull back from 418.50. If you're long, you exit in front of numbers to be sure. We don't have to make them go to the last tick, right? Just food for thought for everybody. All right, no change. Like I said before, could take a while. Take a couple of hours, could take an hour, half an hour, we don't know. You never know. It's quiet. Quiet is quiet. Hold on, I got a candidate here. Give me some time.
Newmont mining has bounced around 1% off that 4250 level.
Okay. I'm working on one. Just give me, there's plenty of time. It's not there yet. All right. Let me just double check something. Yeah. If it did. AJG, Arthur Gallagher. All right. Arthur Gallagher. There it is. 203.05, about a $3-4 swing there. $3, a little over $3. 199.91. That's a zone. Spike the low, rip it back somewhere in here or all the way down. Either way, come up short. That's a zone. It's a few bucks away, but it's down 7 on the day. Why can't it be down 10? So keep that one on your list. What did we say? Newmont was bouncing? Yeah, of course it is. Wish I saw that earlier. Look at that.
She did give you a second shot at it. If you got lucky enough, if you go down the 1 minute chart.
I see it.
I may have taken it.
Okay. All right, Jordan took it. Okay. I was just late to the party. Let's see what else we got. Oh, here we go. Watch this. There you go. Okay. IWM, turn right around. What are we looking at this before? I said if it gets down here, it just turn right around. Relative strength. What do we got over in the transportation department? Flat. Down 13 bucks. That doesn't count. Okay. Let's see what else we got. Oh, all right. Got another candidate. Yeah. It's already bouncing. Shoot. They didn't get there. I'll show you what it was. Let me just load it up. Humana. They didn't get there. That's what you were looking for. So be it. I'm going to keep looking around the horn, see if we can find anything else. All right, give me a moment. Got another candidate. Marsh McLennan. A little bit over $1 spread. It's a zone. Yeah, Phil, but it's $1. It's not. Let's see if there's anything. Yeah, I mean, what are you going to do with that? They're just coming into this breakup candle. There's probably some support at 123.50, give or take. But you wouldn't buy it. Not with all this. Buy it down here. 122.5 for bounce. MMC. Ah, come on. Still good. I'll keep looking. All right, MMC's in the zone. Let's see what happens here. A little bit of a spread. Yeah, it's not an options play. No. Here comes the test of 417.25. Actually, they're already below it. Wasn't paying attention. Okay. So next thing on the, and this is why we have patience, right? Spike the low, rip it back up. 416.50 is on the board. That's the next thing if they do it. If they can't close candles below 417.25, then they'll go back up. Sorry, thanks, Roman. 176, a spike above 176 mark is your answer. That doesn't have to be it, but that they should give you that as long as they found the low. And if the spiders bounce, it should follow suit. If the spiders come back down and this was phony and a fake out, then MMC is likely to come back down. They'll likely trade in tandem at this point, just for a while. See, there you go. Spiders come down a few cents, MMC comes down a few cents. Just the way it works. Doesn't mean anything. It's just what's happening now. And for the newer folks, what's happening now isn't necessarily going to happen in a few minutes from now. So we have to get out of that mindset of thinking because the market's rising or because the market's falling, that's going to continue for the foreseeable future. It may, but we don't know that it will. So we have to rewire our brain not to think like that and just focus on the numbers. Are they above or below a specific number? And if they are, the longer they stay above or below a specific number, the more likely it is they will run to the next important place, as long as you've identified it. And back to looking around the horn for a minute. What am I looking for, by the way? Well, what I'm looking for is I go to my list of stocks. There's at any given time, some additions, some subtractions for various reasons. Any given time is 450 stocks on this list, right? It's just kind of the 450 favorite ones for me. All right. I have my own criteria. It's the ones you see over and over again, plus some others, but these are the stocks. Okay. So I sort them by percentage down on the day. And I just run through them and see if anything is at lows, falling fast. Can I identify a number real quick? It's the same thing I do in the morning, plus another scanner with criteria. But in the morning, if there's volume in the pre-market, I can identify the place or the places. If there's no volume in the pre-market and you got one of those wide spreads, a couple of bucks, I just pass on it because you can't tell. But if I can tell, then I can do the work. Here's one. We got Visa on the move. Give me a second here. I'll do some work. Visa. Okay. Visa. It's a pretty tight zone there. And your stop is pretty easy. 223.48. They stay below, close candles below. Right? They could spike it and rip it back also, and it's not that far away. 223.48 is that number. That's the Close, stay below there, close candles below there, and it's wrong. Visa. And there's your another put. See, this is just a pullback, a test, a pullback, and a test, and a resumption of working on going higher to where 418.65 at some point, maybe 418.50, 418.40, you know, but that's close enough. And maybe it's 419. We don't know. There you go. That's, you know, no heat. Those that took that trade, you know, you're not really ever out of the money. Numbers work. You're welcome, Mark. Nice trade. Okay. Keep Visa up. It's not that far away. Looks like it on some charts, but it's not that far away. It's a buck away, give or take. It's very quiet. I'm still looking around the horn, but not coming up with anything else at present. I'm working on it. Let me just give a psych lesson for some of the newer folks. So let's take Visa, right? And I know I keep saying Visa as in V-I-S-E-R just because it's like dater. So let's take Visa and we're saying, and we're having the conversation of patience, okay? So you could see something like, you look at a short-term chart and let's just say this candle starts to bounce up and you say, oh no, they put in a low, that's the low, they're gonna bounce and I'm just gonna jump in. And they've sucked you in because it looked like it was making a low, or maybe it was temporarily making a low, but it wasn't at the number. So the way we do it is, we don't care what they do unless they get to the number. And the patience part is, if you just eliminate the variables where you just invented another trade on your own short of the number because you thought it was making a low or bouncing or whatever, going to run away and you're going to miss it, FOMO, then that's a recipe to lose most of the time, and that impacts your results. So look at this. So on a 5-minute chart, maybe they just made a little tiny low and maybe they bounce. So what? You just leave it alone, you move on. If they come down to 224.85, you're interested. If they don't, you're not. And that's the point of patience. And when you can eliminate the variable made up trades, reasons, and all that stuff, and you just stick to the process, which is mechanical, they either do or they don't. And if they don't, it's just not a trade. And if they do, then we're interested. We may or may not take it. It's up to us. But if you eliminate some of these variables, or all of it, as many as you can, then your results will skyrocket, because you'll stop guessing, inventing trades in your head, creating reasons that you should be in a trade, justifying it, and then figuring out later, well, maybe that wasn't such a good idea. But then you end up doing it again. So rewiring the brain part is, we stop doing that stuff. Okay? See, case in point. They try and suck a few traders in, they put in a green candle, all of a sudden they're making a low, they're making a low. No, they're not. And if they are, we don't care. This is just working its way down to a place. In my opinion, spiders pull back a little bit and it'll help. Yeah, FOMO. We all know FOMO. FOMO's not our friend. FOMO's our foe. Here it comes. The reason there's two numbers so close together, just so everybody knows, is there are two numbers that are like, kind of like the same but different, and it could be either one. I'm just going to do this just as a just in case, or you never know. Let's say they actually spiked the low, and I'll show it to you in a minute. All right, I'm going to show you why. I'm not saying they're going there, I'm just saying just in case. So here's what we're looking at. You got a low right here, okay? The low is 223.48. Now, normally they're going to get into this place and they're going to bounce it. Sometimes they'll spike it. And if they do spike it, 222.85 is the place that they would spike it to and rip it back. And that's where we are. But there's two good numbers in there before they even get to the low. And that's why I brought it up. We'll see. And when you look at the big picture, we're talking about rounding 223 to 225. It's $2. Spiders are doing the thing. There's just no change. You get a different look, just so we look at different things and get a different picture and make sure it confirms. They're just grinding. There's really nothing here. They made a low in the first hourly candle. They closed pretty well, and they're starting to grind up. Are they going to pull back again? Of course they are at some point before they get there. Yeah, of course. It's the way the market works. Short term, 417.75 is short-term support. Below that, it's back to 417.25 or lower. And staying above is the first real signal that the door is really beginning to open again for not only the highs that we just had, but the pivot, 418.65. No change. They're grinding. If you're long, you stay long. If you got no position, there's nothing to do. You don't buy it here hoping they get there. That's not the trade. Although it's trader's choice. You can do what you want. Just the longer they stay and keep grinding, the closer they get, the more magnetic it is. It gets pulled in, meaning price gets pulled into the place. That's just the way it works. Would we be trying to short the pivot? I'll let somebody else answer that and provide the reason why, and then we'll explain. The question is, would we be trying to short the pivot? Anybody want to take a crack at the answer? Thank you, Mark. There you go. Got a whole host of reasons. They're all the same. Most. They're almost all the same. They're all phrased differently, and they're almost all the same. And here's the answer that came from the crew. Right? This is I'm learning how to eliminate variable risk that we don't need. There's enough risk in the market. I don't need more variable risk. All right. And here it is. This is specifically for the new folks and everybody else. All right. Did that for a reason. There's a method to the madness. Got a list of answers, and I'm going to read them like this. Question is, would we be trying to short the pivot? And we got Mark, Lee, David, John, William, Sammy, Sean, Grant, Joel. We just got a whole list, right? And here's what they are. No, don't short a dull tape. No, slow tape. I thought about it, but I'm going to call it a day. Never short a dull tape. You don't short a dull tape. Torture trade in the afternoon. Don't short a slow tape. Slow tape, no short. No quiet tape. Those were all the answers. Every single one of them was identically the same, phrased differently. And there's a method to the madness, and I want to drill it into your heads that they may react if they get up there sooner than later. They probably will react at the pivot if they ran up there right now. But if they're going to continue to grind up, and I have to provide an answer, the answer is we're getting closer to that end. Well, we're done with the morning rush. There hardly was one. It's a slow tape, never short a dull tape. We have that on a sticky note in front of our computer, on the side, on the wall, on our forehead, wherever we have it. We have a sticky note that says never short a dull tape. What do we have today? We have a dull tape. And by the way, who asked that? Bob V. I'm not doing this to you. I love the fact that you asked, because look at the conversation it just promoted for the benefit of everybody else. So it's fine. There's no fault in asking a question. You're going to get the answer by yourself. You're not going to have to ask that anymore. The longer you stay here and the more you learn and the more you hear answers like this, and the more instead of just saying nah and move on, I have this long-winded answer, the reasons why, and I want to drill it into everybody's head that we don't short around lunchtime, dull tape, light volume, creeping markets, all that stuff, because we call it the torture trade. A lot of times when you have a creeping market and they hit a number, it doesn't just all of a sudden, and sometimes it does, but you can't count on it. It doesn't just all of a sudden pick up speed, rip it down, give you the trade in a minute, and you're just whistling Dixie. It doesn't work like that. A grinding tape could stay up there for a while. They torture you by moving around 10, 15, 25 cents back and forth, back and forth. Then all of a sudden they're eating time off the clock around the pivot. Then all of a sudden it looks like they're going to grind higher. They come down, they keep you in the trade, they pop back up, you're pissed. That's the way the torture trade works. And that's why we don't short a dull tape. And that's the reason why I wanted to do it the way I did it in terms of the answer. So thank you for the question, Bob. Yeah, and IWM, check this out. Thanks for bringing that one up. Who brought that up? Phil. Look at that. All right. Remember what I said last night? You had some moving averages at 180. Here's 180. You have a gap up here. The gap is at 181.41. All right, we'll just put that on there. 181.41. Okay. They're at the 180 we talked about last night. Who thought they would happen by 10:42 the next morning? Not me, but that's where they were going if they were bullish. You're welcome, John. Well, I don't want you to think about it like that, Ashley. The tape is already torture waiting for 41865. That's where you have to rewire the brain for patience. And I said it 2 or 3 times. Could take time to get up there, could take a couple of hours. So with that said, knowing that, hearing that, which you may not have heard that, but that's what I said, you have to say, well, they're just grinding. They're going to go back and forth. I said that twice. So I said it could take time a couple of times. I said they could go back and forth a couple of times. And as long as they stay above a thing, a certain place, then that's what they're doing. And they are going to try and torture you. So your job is to try and eliminate the feeling of the torture because you're going to substitute it for, I'm going to have patience and I'm going to trust that as long as the market is above a place, they're going to get to the next place or at least very close to it or past it. If they come back below the other place, and this time, you know what if below 417 and a quarter, you got the low and then the spike to low and 416.50. But unless that happens, they're just grinding. And if you have a belief in the numbers and the process and the mechanics, meaning as long as they stay above for a long time or long enough above a place, they're going to run to the next place or they're going to make an attempt to run to the next place. Once you have that comfort level that that's actually how it works, because you've seen it so many times, unless you know the numbers and you know what I just said, or you're aware of it, or you look at it that way, you can't look at it that way. So you're not thinking about it like that. And that's where everybody that sees something, or let me say it, rephrase it. We all look at the same thing. We're all looking at the IWM and the SPY 15-minute chart right now if you're looking at my screen. We're all looking at the same exact thing. However, even in here, based on everything I've said already, there's still plenty of people here that see something completely different than I see. And that's fine. That's what makes a market. I don't have to be right. I don't have the patent on being right. I'd like to be right. That's what I try to do each and every time. But I have a awareness that I'm not going to be right every time. And if the market just falls out of bed right here and comes down to 416.50, okay, well, I've got something for that, meaning I have an opportunity there. And if the market stays above 417 and a quarter, better yet, above 417.75 on candle closes, then the door is cracking wider open for the pivot, 418.65, first the highs. But they're eating time off the clock right now. That's all they're doing. They're going back and forth, 10, 20, 30 cents. That's not a market moving. Those are computers trading the market back and forth one way or the other. And there's no participation / conviction that you can draw from while they do that. That's a long-winded response to a comment that didn't really need a response, Ashley. I know that, but I felt the need. You're welcome. And I understand everything you were saying, but it doesn't have to be torture. If your position, let's put it this way. Let's just say you bought it and you've already taken some profit. You got a base hit in your pocket, whatever it is, and now you're waiting with a trailer. That's the best of both worlds. You're in the driver's seat. You can't take a loss in the position. The worst case scenario is you keep the base hit and you're out on the second, you're out trying to stretch it to a double. All right. And that's okay. You still got a base hit in the book. And if your position size is appropriate for you, then you're not sweating bullets. You're not really being tortured. And I know it's a figure of speech and I get the whole thing. I'm just, this is a good conversation. It's a real conversation because I'm trying to get you to understand how the market works and then how to work the market. And the trading aspect of it is how to work the market, how to work the business. We work the business because we know how the market works. I think I just coined that phrase on the spot. Write that down. I just wrote that down. That was a good one. Nah, first time, best time, Sean, I can't tell you. No, I'm just kidding. The phrase was, let me read it back. I wrote it down. We learn how the market works so we can work the market. The phrase in and of itself, it isn't going to make you money. It's the understanding of how this all works and why we do what we do that makes you money. It's all the things wrapped up, how the market works, and then within the framework, we work the market. And that's taking a base hit, being productive, running it like a business, not having an understanding of above or below a certain number, having an understanding of where the numbers are, and working the trades, working the market around the numbers and around how the market works. I like it. Yeah, that's a good one. I'll be back in a couple of minutes. In fact, I'm going to take a walk. 3 to 5 minutes. Okay, back. So are they going to pull back again? Yeah, of course they're going to pull back. It's going to go back and forth. And that's why I said before, you can't buy this. They make a low, then you're going to buy it near the highs, hoping they make another leg higher. That's not the way it works. That's holding a trailer. And if you don't want to hold a trailer anymore, that's up to you. What do we got for questions, comments, or complaints? This one's taken a while too, by the way. There's nothing wrong with it. What they do, they came back to test the third number, right? Or what was the new number? Let me take a look at Tesla. Hold on. They're actually above a resistance area. Here, I'll bring up the chart in a second. Bear with me. Yeah, one more look here. One more chart. They were above. The next place is 197.50 if they get above, right? But that was resistance. So you were right, by the way, Rath. You were right. You were correct. Yeah, this is a very difficult stock to short, Tesla. You're fighting the fan favorites. Let's call it 35. Let's give or take. That's support. Yeah, you don't want to fight that guy. He's a winner. Like him or not, he wins. Elon Musk. You don't have to like him, but you have to be realistic about the person. It's like a Steve Jobs, unlikable by a lot of people, but what a winner. I mean, he didn't care whether you liked him or not. He was focused on winning. Same with Elon Musk. He's a winner. He's been he's had so many opportunities to fold him, with Tesla early on, and he just wouldn't do it. He fought through. It's a winner. Very quiet. Questions, comments, complaints. Give me some complaints out there. Come on. Yeah, me too, Austin. I have a list of numbers. I got alerts, and I'm waiting. Patience. Just realized it's Memorial Day on Monday. Market should be closed. I know you can't hear me very well. Memorial Day on Monday. I'm assuming the market's closed. I'm looking it up, double checking. Never know these days. Let's assume they'll wipe out in Memorial Day. Yeah, it's closed. Of course it is. It's still a holiday till they decide to cancel it. V? Okay. Who asked that question? Chris. Good. Chris, were you here 15, 20 minutes ago? Just curious before I answer. Okay. So what I said on V, which was a whole big discussion on a whole host of other things, but it goes to the process, the mechanics of what we do. We wait for the numbers. If the stock doesn't hit the number, we just move on. We have patience, whether it hits or not. We only want it if it does. And if it doesn't, we just say, all right, forget it. They didn't give me what I wanted. And that keeps you in a comfortable zone, a comfort zone, because they gave you what you expected. And when you expect something and it happens, you have a different confidence level of getting in a trade, for example, than when you just guess. And deep down you guessed, and you're just hoping it works. But when you pick a number, it hits the number, and then all of a sudden you see the market start to bounce around the number, and it starts to form a little short-term bottom, and then it starts up again. Well, that gives you the confidence that the numbers actually work, and that the process works and the mechanics work. And if you just have patience and wait for the thing you want, then you eliminate a lot of variable risk you don't need. And that's why there really is no opinion to answer your question directly right now on V. The only opinion is they didn't hit the number and therefore I'm not interested anymore. Trying to rewire everybody's brain to think not really the way I do. I think mostly proper about how the market works, at least for my opinion. And I'm trying to disseminate that to you. And so I'm trying to rewire everybody's brain to eliminate a lot of the variables you don't need. The news, just to name a ridiculous one. You don't need that. How many times are we sitting here, whatever we're looking at, the spider gets to the number, and then somebody will come over the top after the fact and say, oh yeah, this happened. Well, I didn't know what happened. I didn't care. I'm not watching the news. I have the TV on with the mute button from exactly 9 o'clock on for the rest of the day. Okay, I watch it early in the morning. I like the morning crew, some good interviews and stuff like that. Don't love everybody on there, but I like the morning show when I'm in the background. But I can't, have to turn it off when the clown comes on. So the only thing I see during the day, if I look up, is a headline. That's it. And I rarely even turn it on to listen because I don't want to know what they say, because they're wrong 99.7% of the time. We say about the spiders, they pull back, they go back up, they torture you, to Ashley's point before. But that we know they do that. As long as they stay above a certain place, they're going to get to the next place. We don't know how they're going to get there, but they'll get there most of the time. 180. Nobody believed this trade. Nobody wanted this. Not to belabor the point. Nobody wanted this. Nobody. Who was buying it down here other than me and some of you? Nobody. Almost picked the bottom off. After it goes from 65 and I waited, and we talked about it a number of times. I said, I never hit my number, never hit my number. Hit my number from 65, let's just call it down to 37, 38. That's why the patience thing. I just don't take trades unless they hit my numbers, because then I get pressured into it because people say, there's not enough trades. Well, then it's not for you. Am I in stock? This stock? Yeah. I took profit today. Now the rest is trader's choice. The rest is a free ride. Free ride. Some traders took it with options. I bought the stock. Yeah, SCO was the last one before that. Thanks, Shannon. Yeah, look at you. 10K on those two trades. That's fantastic. That's why patience pays. What's the difference how many there are? Yeah, that was a swing trade. Till they get to the next number, which is an exit, and then the next one after that. That's the answer to Ben's question, how long do you usually stay in? Could be a day, could be a week, could be more, could be less. No, you're not. You're not missing anything, Sean. Don't have FOMO. SCO and KRE, both are still open on trailers, Nick. I'm not sure that was the buy price on this screen. Let me double check that. Yeah, 23.76. So bought it down here, wrote it up. Still holding a piece for a trailer. That was the trade right here. Let me see what day it was. 424. Yep, right here. No, hold on. 424. Right here. This was it right here. That was the trade. Out of the money real quick, and then a rip. That was the trade. No, it's not a day trade, Ben. We were just talking about some swing trades. Yeah, for the most part, Ashley. For the most part. Sometimes you'll get a better entry, sometimes you won't, but it depends on, like, I'll send an alert when it hits the numbers, and you may not get it for an hour or two, but sometimes that'll be in your favor. What about it, Nick? Did I have them? No, I had the stock. Some traders will take the options. It's trader's choice. I'm telling you the direction oil was going to go, and it was going to go down. So SCO is inverse. So if you want to trade oil any which way you want, that's up to you. SCO is inverse oil, right? So I'll be back in 30 seconds. Eating time off the clock. What else we got? Any other questions, comments, complaints? Yeah, you would have been able to take a call on SCO. Not now. That trade is long over. This is a trailer on. Yeah, that would have been the play. Let's get a different look on the spiders, just to see one more time. All right. opportunity to go down. They chose not to. You look at an hourly chart and you say, well, why didn't they keep going? Why didn't they run a test at a low of day? Bears couldn't do it. They couldn't push the Bulls down. I'm just, giving you kind of what's in my mind from a what actually happened standpoint. Forget the numbers. Just what happened on the chart. They tried to go down. They couldn't. They popped back up. Rescue operation. We've got a slow tape, light volume, lack of participation, essentially lack of sellers currently. And so conceptually, they pop back up after not being able to go down, and they're eating time off the clock inside the first candle. That's really it. That's all that's going on. The first candle meaning this is the opening range. The opening range is important because traders historically have always used, and I still believe it to be valid, the opening range high and low as a benchmark during the day. Will they test the opening range low? Will they close candles above the opening range high, which generally will open the door for another leg higher? So the opening range is important to know, and that is the first 30-minute candle, opening range. Why is that? You can make up any reason you want. Doesn't really need to know why, because you can't prove it one way or the other. And that's why I always say, the why isn't really important, because most of the time, nobody could ever prove the why that the media comes up with or anybody comes up with. The why. They don't know. Can't prove a cause and effect. Most of the time you can't. They create the cause and effect. They invent it. I have no thoughts on that, Alan. I've never used a tick chart in my life. There's no data in the candle. It doesn't make sense. You can't see what's going on. Like, let me explain. All right. Here. Okay. See that? What does that tell you? Well, if it was a hourly chart or a daily chart or whatever, I could say, well, it's something. But on a tick chart, it go either way. These moving averages don't mean anything, because you start to go out like this and it just looks totally different. Totally different. Gives me a different view. Where are you going to find the symmetry on a tick chart? Well, I'm just going up. Here's my point. I'm just using a ridiculous time frame, in my opinion. That's all that was. It's not enough data in any candle. It doesn't give you a sense for what the market's really doing right now, because a tick, just same thing where the market could be doing something right now. It doesn't mean it's going to continue over the next minute or two, and it's whip around, and minute to minute, you don't know. I would trade the numbers, Alan. I can't say that enough. I say it every day, all day. I would just trade the numbers in the process that I teach, as opposed to saying, well, should I look at a faster chart? Well, if you look at a faster chart, you're going to get a skewed sense of what's actually happening, and it plays games with your emotions because you think something is happening faster than it actually is, because a move on a tick chart or a 1-minute chart looks a whole lot more dramatic than it does on a 5-minute chart or a 15 or an hourly. So it doesn't give you a sense of what's developing in the market. So I would just continue to try and learn what I'm teaching here, which seems to work. And if this helps, and I say this, when we get on in the morning, and if I have an hourly chart up, it doesn't matter what the time frame is you're looking at if you're focused on the numbers. You could look at it at a daily chart. It doesn't matter, as long as they hit the number. It doesn't matter what the time frame is you're looking at. But I don't want you to get a skewed sense of what's going on by those short-term charts. I try to steer you away from that. It's just my thoughts. Those are great for TikTok videos. When somebody wants to pretend they made a good trade and they make up a video using a replay and the voiceover and text, and it looks like they made this tremendous trade and they didn't. And we've all seen those, obviously. Not that I'm on TikTok, but I see them on YouTube. I see them everywhere. You're welcome. And because other people do that, just for discussion purposes, I try and set myself apart in that I just show you everything. In the video, I show you all the notes, or sometimes I'll post the whole, session here. Just, you want to see what's going on? Here it is. There's no clip that's manufactured. I'm not doing that. If it happens to be a bad trade, I talk about it in the video. It lost. It's going to happen. Why not discuss it? Why not make sure everybody realizes that this is not a, this is not a business where you could win every day, all day. Nothing is. That's ridiculous to think that. We'll win most of them. That's just evidenced by what happens. If that changes in the future, so be it, but that's not the case today. Yeah, exactly, Raf. I mean, you just, like, it's those people that say, oh, what, 4x bots, make 1% a day. No, you don't. Doesn't work like that. Well, let me ask you this, Raf, just to have a fun discussion about rewiring the brain. What makes you think, this is what Raf says, and I'm not doing this to you, Raf, I'm doing this with you, for everybody. What makes you think, or pardon me, I think they'll move this afternoon, but I'm closing the platform because he either got a profit or doesn't care or whatever. That's fine. But what makes you think that they'll move this afternoon? Just curious. Maybe they will. They probably will. But what makes you think that? Maybe they're eating time off the clock, the pivot's above, they tried to go down. All those are valid reasons. But what we can't do is, and I'm not saying Raf was doing this, I'm just having the discussion because it's something to talk about. You can't make an assumption that something is going to happen. What we do is we say, this is the setup, and he's not wrong, by the way. This is I just want you to think about it slightly different. This is the setup, okay? If they stay above 417.75 on candle closes, it's really going to begin to widen the door, not only for the highs this morning, opening range high, and then once above that, it opens the door for 418.65. So that's really the last gateway that we need. As long as they're above 417.25, it's still okay. And if they're below those things, we look to the next number below until they're back above one of those things. Then we start to look above again. And it's the same thing you said without the I think. And I just want you to think about it in terms of, hey, this is the deal, period. It's binary, it's black and white, it's however you want to look at it. And it's just a slight alteration in the thought process. Get rid of the I think. Because I think is a fractal or subset of assumptions. And I don't want to do that. It's just a tweak. It's a little tiny wire. Rewire it. Little one. Yeah, Jerome, it takes time to learn the patience. That's the conversation. Correct. But it's a huge step. As Jerome says, keeping a trailer here for 418.35. It's in front of 418.65. You just pick a number, so he picked a number. Good. The patience factor is hard to learn, but it definitely is paying. And you're 100% right. But once you train yourself to do it a couple of times and you see it work, and sometimes it won't work, and we know that, but that's the one where you get the base hit and you're out trying to stretch it to a double. That's okay. But the ones that do work, it gives you more confidence because now I saw it work. And by the way, as I saw it work, I got paid. So I like that. So I'm going to continue to try that because now I see the result. I touched the result. The result was tangible. It went into my account. The result of my patience was a direct payment plan. So look at it that way. You try to make it happen, to hold on to a trailer because some of them will pay and some of them pay whoppers. We know that. Hey, Jerome, and anybody else, we don't know that this thing won't be back at 420 this afternoon. How do we know it won't happen? Why wouldn't it happen? Is there a reason it can't happen? Well, let's go to the daily chart and find out. Let's say they recapture the gap from yesterday. So now they're positive on the day. Who's to say they can't rally this afternoon another buck or two? Why not? $1.50. Why not? Is that like out of the question? Can't happen? No freaking way? I'm not going to say that. No way. I've seen everything. I know they can do anything. So if I'm holding a trailer, and they're above the pivot this afternoon, I'm holding it right into the close, or maybe right into the close. And when I mean into the close, one of those days where they just ramp them up right to the last minute. I've had those. You just hold it right into the close, or a few seconds before the close, or a minute before the close, whatever. Right conceptually, right into the close. Let me read some more stuff here. As I was babbling on, we've got some extended commentary. So now I'm reading Ashley's. Give me a second. Yeah, exactly. I'm going to read this out loud, but I'm reading on first. I was a member of another trading community for about 2 years and lost over 20K. Their profits always gave me FOMO, which made me develop some really bad habits. Your ongoing commentary is slowly helping me to understand the market. This was something that my first group didn't do. I know they could make money for themselves, maybe. You don't really know that. Maybe they did. But they were not able to offer the ongoing education that's going on here. That's basically the bottom line. So I appreciate that, Ashley. And I don't know what other trading rooms do specifically, but I have a pretty good idea. Because most people don't know what they're doing, they have to augment, they have to pretend, they have to create excitement because they have to keep you around, they have to attract you, they have to create reasons for you to be there other than just this is how it works and most of the trades win and here it is in black and white, decide for yourself. Seems like a better program for me, or seems like a better way to present things. So I appreciate you saying that, Ashley, and I suspect that's the case around the horn a lot because they treat them, like I'm going to jump in here, and they trade on hope. They don't know what they're doing. Most, some do. Here's another one, Mark. Check this out. Well, everybody check this out from Mark. Since April 1, when I committed to following along exactly, I've had only one losing trade, a couple of break-even days, a couple of days with no trades, and the rest winners. Each day I was finished in less than 2 hours and off doing other things. And he's profitable. How do you like that? So now, knowing that, thanks, Mark, knowing that that is the case, and Mark didn't say this, and I don't know this, but I'm going to tell Mark the next step that he's either already doing or will do in the future. He will wait until he's comfortable, and then he will slowly increase his position size along the way. Not all at once. He's not going to go double what he's doing today. And I'm hinting, Mark, and I'm assuming you already know this, that he will increase it a little bit, and then a little more. And he will take full advantage of the compounding effect of his account. So let's just say, let's use easy numbers. You have an account that's $100,000, and over the course of some period of time, and everybody's different, could be a day, could be a week, could be a month, could be 2 months, the account becomes $110,000, $112,000. Okay. So now you're going to increase your position size a little bit. Maybe you wait till it's 120, whatever it is. You increase your position size a little bit. So let's say I was trading, we'll use stocks for this example since it's 100. So I have plenty of buying power. I have a pattern day trading account. I got 400 and some odd $1,000 of buying power. So let's say I'm taking positions that were $30,000 positions total. If it's 3 entries, 10, 10, and 10 in a stock. Let's just say that was the case. Maybe it's 50, maybe it's whatever. Doesn't matter. And now maybe that 30 becomes 40 or 35. Maybe it becomes 32.5 each entry. So now my wins are a bigger percentage of same percentage of a bigger number. All right. And if you project that out and you stay profitable and essentially your account, if you look at a graph of your account, for example, it goes from bottom left to upper right, not necessarily in a parabolic manner, but just a steady move up. Well, guess what? What's going to happen to the numbers? They're going to exponentially grow, but you have to have patience because it's not going to happen by next week. It's a long-term process. All right, next. Yeah, well, that trade was over. Remember? They didn't get there. They came close. They bounced away. Now we don't want the first number anymore, but the second one might be good. But that was the bounce, right? Let me see, Blaine. That could be true. I call them shenanigans tail candles, but I kind of knew what you were talking about. I got it too. Yep. Okay. So Blaine saw a shenanigans tail candle on the daily chart or some chart. I found it on the daily. Okay. And here it is on TradingView. I've got it on TradeStation. So the high of day, and this is what we're talking about for the folks that have never seen this before. The high of day comes in at 418.72. Has market been up there yet? No. 418.72 is just above the pivot. So it doesn't mean they're going up there, and these shenanigans tail candles, Blaine called it a ghost tail, that's fine. Excuse me. They typically go to gaps. So the reason that we don't really need to know any more than the fact that it exists is because if price is getting close to the gap, you know that's the next place, which the pivot happens to be right under the gap. So that place at 418.65, 418.72, the gap is important. And once price begins to move up, it's going to be magnetic and draw price in. So that's the way we look at it. Good spot there, Blaine. Armand. Yes and yes, but as long as they stay above 417.85, which is short-term support, and even if they're below that, the line in the sand is 417.25, then the door is really still open to get up to 418.65. And then we just talked about that shenanigans tail, which you probably heard, and that goes right up to the gap at 418.72. So, you know, signals are pointing, and that's the best I can tell you. Thanks, Chris. I'm going to read that one out loud because that feels pretty good. I've also been at this for a long time, learn more here than any place else. He likes the approach. No BS approach. I appreciate that, Chris. That's the goal, right? You got what on a 5-minute chart? I'm not sure I understand that. I'll get back to you in a second, Nick. Chris, you're asking a 5-minute chart. I'm not sure what that refers to. All right. In the meantime, while we wait, Nick is asking the spike candle. Oh, you have it on a 5-minute. Let me see. Not here. Let me check the trade station. No. Okay. I'm not what a, so Nick, I don't know what a simple cross candle is. I'm not sure what that means. I'm not sure at all. That might be somebody else's something or other that doesn't fit with what I do. Spike candle on this chart here. This? No. No. That actually happened, if that's what you're asking. This one is this one. It shows up on my chart on the daily chart. The high is 418.72, and that actually did not happen. I just gave thoughts on Visa twice. The trade was over. They bounced it in front of the number, and then I gave a whole speech on it before. I said, just forget it. You know what, Nick? I'm lost. I'm sorry. I'm lost on what you're trying to ask or say. I would just go with what I said. I don't want to make it any more complicated than it needs to be, and forget it. Doesn't need to be any more complicated than or hard than it is already. And it's not complicated if you just step back, listen to what I say, and over time you'll kind of look at it that way, and you won't be able to look at it another way. You won't be able to unknow the information. The more you take in, you can't unknow it. You can't unlearn it. It's impossible. You'll just learn more stuff. All right, we see what's going on here. I think what I'm going to do today is I'm going to take a break now, and I'm just going to come back at 12:15, and we'll see what's going on then. Yeah, so Visa's bouncing at the second number, but I didn't suggest that. I didn't like this. You know, that's not. That changes everything. Yeah, spike the low and rip it back, but they're doing it at the second number, which I would have never bought this. Not after that. Okay. So that's what we'll do. I'll come back at 12:15 and we'll see what's what. All right. I appreciate everybody. Quiet day. Some traders got some stuff. Some traders probably shooting blanks. That's okay. We'll be back a half an hour. Appreciate everybody. All right, I'm back. A little bit late. Lost track of time. So they're pulling back. 417.25 is the line in the sand where if they start getting below, closing candles below, it opens up the door. Spike the low and rip it back up, back up. Any questions, comments, complaints? Anybody in Visa, even though I said not to? Well, I didn't say not to. I said I didn't like it anymore. At least that first number. Anybody in Visa? Anybody hear me? Bueller? Okay, thanks. Just double checking. Thank you. Okay, those of you that are saying not in Visa, I'm asking anybody in Visa. So I don't need to know that you're not, right? Why would I need to know that? Just saying. Just saves you the trouble of typing it in. You don't need to type it in. Anybody got anything else out there? I mean, this is it. Nothing else going on. I'm happy to stay on for a while and talk about stuff, but if there's nothing to talk about, that's it. We'll just call it a day. Yeah, at this point, Jason, if I was going to do something at all, it would not be before 416.50. I have no idea whether they'll get there, but I wouldn't do a thing before that. That's me. I can't find a reason to do anything before that. Let me take a look at my other screen here, Shannon. I got a bunch of charts on another screen. Yeah. Let's take a look at something. All right, forget this. What have we been talking about each night in this weekly chart? So the only chance they have is to get into and through these moving averages, and then if they do, they'll begin to climb this breakdown candle. So they're starting to get into the moving averages. There's a gap right at the second one, which is a 20-week moving average, and then the next one's above that. It's a 200 period. It doesn't matter what they are. There's a convergence. So there's 3 moving averages right here. They hit the first one today. It's also these highs, which is the top of the range. There's a lot of resistance here. But if they can push through on a solid, up tape, then, they can get up to 183. Are they going to get through there anytime soon? This is a weekly chart. This could take weeks to happen. Are they going to sustain this for weeks? Or are they going to pull back? Is that it for today? Touch of the first moving average on the weekly chart and a rejection? Maybe. Looks like it. Makes sense to me. Look at that daily chart. Another convergence of moving averages. Funny how that works. They're magnetic. They don't generally constitute a trade in and of themselves, but look where you are. You got a breakdown candle high. We talked about this in last night's video and probably 30 other times. 180.39. 180 is a big fat round number. Moving averages, the convergence is a little above 180. Okay. Weekly chart, you got the 50-week moving average. They hit it today. Where is it? Right around 180, a little above. Top of the range. This is resistance. All those things put together tell you that it's garden variety resistance. Whether it's for more than a day or not, we'll see, but it's resistance. Remember, resistance is first they stop going in the direction they're going. Then they'll make a decision whether they want to eat some time off the clock, obviously keep going, then it's not resistant. There's another number higher, which could be into that convergence of moving averages for sure. And the second phase is if they don't go sideways and eat time off the clock, then they pull back. That's kind of my definition of what resistance is. It's really a two-step approach. Look at that resistance in Tesla. We talked about that before. They did get a bounce off that number I gave. Not a tremendous one, but they bounced off of it. That was the number. They gave you one above 190. Not much. Not much at all. Let's see what else we have. I mean, your next spot is this low, 186. That's the next zone in Tesla. Not far off from your stuff, Raf. It's just my zone. And I showed you why. This breakup candle low. That's a good reason that they'll fight that normally. In the IWM, Shannon, wasn't the worst idea in the world, I can tell you that. All those reasons. Yeah, it wasn't a bad idea at all. All right, just saw a headline. It's worth mentioning just for fun. Chinese immigrants suing the United States for disallowing purchases of land, whether that was state specific or I don't know where it was, doesn't matter. That's interesting. Could you go over to China and buy land? Probably not. Now, if they're citizens, they'll win. All right, spiders are, they've done the first phase, which is spike the low. Question is, will they get to 416.50 or lower and rip it back up in the other direction? You know, it's lunchtime. That's trader's choice. Don't know if it's a stay down all day, Nick. I have no idea. I suspect probably not, but we don't know, so we don't even think about it. We don't know. I have no idea. Would have potentially went long and up from 418.65. Not sure I understand that completely, but remember when I said up here, you can't buy it up here because you're hoping they go up. I'm telling you, if they stay above something, they have a chance. And if they're above something else, the door opens and the door closed. And that's why you can't buy near the highs. It's not a prudent thing to do. It never is. Most of the time, it doesn't work. Be right back. Fab, you already took a little scalp off that? Yeah, okay, good job. Everybody does what they're comfortable with. 417 to 417 and a quarter is what you're looking for if they give it to you. You see how 416.50 is now overhead resistance until they're back above. Just for psychological purposes, if you're in a trade or if you're even watching this, just because they got to and through the top end of the zone doesn't mean you're not in a support zone. You're in a support zone. Doesn't mean they can't come lower. I gave you a zone. Top of the zone is not for the one trick pony, right? If you're one entry player, you're not interested in the top of the zone. They can come anywhere in the zone and to the bottom. The bottom is a specific number. Doesn't mean they have to get there. It means they can get there. So I gave you two numbers, which creates a zone. And then in between 416, just from a short-term perspective, is magnetic. The alter ego stuff, if you're in a trade, you're not pounding the table because it's down a little bit. If you bought the top end of the zone, you have an understanding that if you bought the top end of the zone, you're willing to buy at least one more time, if not twice. So the trade is just beginning. It's not over because you're in the red if you're in the red. I don't know that you are. I don't know anybody's in the trade. I'm just saying about this. We have to stay centered. When you think about it correctly, it's a comfort level that they're in a zone and they're likely to bounce in the zone, and sometimes they won't, and sometimes we're going to take a loss, but this is the zone that they should bounce from within, and therefore it's in process, right? They're running a test of a place. I'm here just watching, letting them do their thing. 30 seconds. Back, no change. Just waiting, patience. Be back again in 30 seconds to a minute. Be right back. Okay, they're doing a little bit better. That's why I walked away. Give them some breathing room. No change. 417 to 417 and a quarter is the next spot. 416.50 is still overhead resistance until it's not. Until they can sustain price above for a period of time. How long? Well, we don't know, but it starts small and it morphs from there. The longer they stay above, the more likely they are to get to the next target. Nothing changes from what we've discussed all day long. Yeah, me either, Mark, and that's okay. I just was here and they did it and I stuck around because I had nowhere to be, so that worked out so far. I do have somewhere to be probably in a half an hour to pick up my daughter. I'm here, just watching. I know both sides. It's one thing or the other. They either get back above 416.50 and go, or they get below the low, which in this case is 416.31, I'm sorry, 415.89. And then that opens the door to 415 and a quarter, which is another bounce place. Okay? Just so you know. It through on purpose. Just let them do their thing. A little back and forth. Let them try and recapture 416.50. Been up here a few times. They're trying. Let them do their thing. Takes time. Time is more important than price. I'm here. Place, Mark. It absolutely helps you with the kids. No question about it. Patience. That's what we're talking about. Helps you in all aspects of your life, not just the market. Okay, they're doing a little bit better. 417 to 417 and a quarter is an exit. That's the scalp portion. The rest would be trader's choice. Nice job, Jerome. Just under 800 bucks on the trade. He's out. Got the low, close to the low. Well done. It's good enough for him. He's out, doesn't care. That's comfortable for Jerome. There's nothing wrong with that. Maybe he's got somewhere to be. Maybe he doesn't care. Maybe he just looks at it as a gift. It doesn't matter what the reason is. He did what he wanted to do. Everybody does what they want, what makes them comfortable. 417 to 417 and a quarter is the target. The only reason I'm saying 417 is just in front of the target. 417 and a quarter is the target. Sometimes they come up short. Just so happens 417 could certainly stop them from going up temporarily. No question. Okay. Call it a spike of 417 in that area. That's why I said 417 to 417 and a quarter. You take the scalp off at 417. They're doing the thing. At this point, it becomes trader's choice. You know, do what you want. They did what they were supposed to do. They spiked the low, they got to the number, they got into the zone, and then they turned around and went back in the other direction. It's a support zone. The first thing is they find a place within the zone. Sometimes it's right at the top number. Sometimes it's at the bottom. Sometimes it's a spike at the bottom or anywhere in between. And they just did the thing they were supposed to do. That's why we stay centered, calm, patient, and we just let them do the thing they're supposed to do with the full and complete understanding that they're not always going to do it, not every time. It's just most of the time they're going to do it. So therefore, we have an understanding, a calmness, and we just let them do it. It's time. Time is more important than price. They go up, they pull back. They come up short, they go up again. This is just the way the market works. Back and forth, back and forth, back and forth. You know, that whole wave theory, Elliott wave, this wave, that wave. There is waves. There is something to that. The market moves in, you could say, waves. Everything's a fractal of one another. A big wave up, and within a big wave up, there's smaller waves down within the big wave up. Those are pullbacks. And it happens on a fractal of every single time frame. A wave up or down. Take this wave. Take this down move on the 15-minute chart or any other chart you want to look at. And within that, this is a wave up. We don't know whether it's going to eclipse that. And if it does, there's another wave up coming. And if it doesn't, there's another wave down coming. Leg down, wave down, down leg, whatever you want to call it. Just doesn't matter what you call it. Just have an understanding of what they do. You know, this candle, just hypothetically, you know, what does the market do? Some of the things it does. So this candle will close in about a minute, this 15-minute candle, for example. Okay, not the 10-minute, it's 15 past the hour. It's 14 right now past the hour. So a 5-minute, a 15-minute will close, all right? Now, could they run back down to 416.50 to run a test, or even a little lower to run a test after they close this candle, right before they close the candle, all that stuff? Sure. It doesn't mean they're collapsing. It means they're running a test on a fractal of this particular time frame. Maybe they go lower and maybe they break the low. We don't know, but I'm just saying that's not out of the ordinary. So when you see that, you need to train your brain, rewire the brain to say, hey, that's normal. They go up and they go down. What we want to focus on is, are they finding support at the 416.50, and are they going to sustain price above on candle closes? And if not, we're not ready yet. So there you go. There's a good close. Don't misunderstand me. I'm not saying they come down after they close the candle. I'm saying if they do, it's normal. And if they go up, that's normal too. Either way. Nothing they can do right now is not normal unless they just collapsed out of bed and fell below the low and went all the way down to 15 and a quarter. After what they just did, that would not be the norm. That would be outside of the 80-20 rule. That would be in the 20% camp right now. It can happen. We're aware of it. That's why it happens about 20% of the time, or maybe less, maybe more. It doesn't matter. It's just that's the minority part of the time, not the majority based on what the tape is doing right now. So I'm aware of that. Can happen, probably won't happen. Probably doesn't cut it. Can happen, but the normal thing to do now is get to 417 to 417 and a quarter. That's my take. Just talking you through it. Things don't generally happen on our time frame, meaning the timeline or time frame that we would like it to happen. And we have to rewire our brain to understand that. It's market time, and we don't know when she's going to do what she's going to do. We just know the normal thing is stay above one, they grind to the next. Stay below one, they grind to the next. That's really the big picture that you need to know. get above the high that they just made in the last candle, and they'll run the 15 cents up to 417, 417.10, something like that. I am going to have to leave in a few minutes. So just let me say a few things just in advance of that period of time coming. This one technically is trader's choice, even though they still came up a few pennies short of 417. I think everybody understands that you should probably have a base hit in your pocket. Unless you only bought the 416.50 and waited, then you might be waiting for 417. But anybody else that bought a spike of it and all that stuff, I mean, you really should have taken your 6, 7 points, 8 points already, whatever it is, okay? Even 9. Not that they won't get there, I'm just saying, okay? It's kind of a trader's choice at this point. Any other questions, comments, complaints while I have the time? This is a good example of when there's not a lot going on and it's quiet and the writing's on the wall, it's a chop shop type of market after the morning rush. Then we wrap it early, like yesterday. They basically went sideways all day. There was nothing to do anyway, even if we were here. There was nothing to do. But today, they did something, happened to be here, and we stick around. So it's just dependent upon what the market's doing and how long we really need to make the morning session last. Again, it's not that they don't do anything in the afternoon worthwhile. It's that the majority of the time they don't, and it gets you in trouble. Therefore, we just eliminate that risk factor, that variable risk, and it's a morning business. And I know the majority of time, 80 to 90% of the trades will happen in the morning anyway. It's only 10, maybe 15, 20% on the outside that, not even 20, that will happen in the afternoon. It's more like 10. And therefore, 10%, 10, 15% of, really good ones that you would really want, not the ones you look at after the fact and say, oh, I could have done that, not those. And so it's a morning business. And I can't do it all day, every day anyway. It'd drive me crazy. I need a break. I start early and I need a break. And I take the afternoon and I do my thing. And then I do the video at the end of the day. When I say points, it's S&P points. So the way we translate it, Nick, is if I say 8 points, that's 80 cents in the spiders. Each point in the S&P, the ES, the MES, the S&P 500, each point is 10 cents in the spiders. Half a point is 5 cents. One tick in the ES is 2.5 cents in the spiders, which is why I use the spiders. I get it as close to the penny as I can. And when I say 10 points, that's $1 in the SPY, and that's the translation. Very simple. Here they come to retest 416.50. After coming up slightly short, I have a few pennies of 417. Exactly what this is what they do. They spike 416, they'll whip you out, they'll try and whip you out, they make you think it's wrong, they'll come down to 416.25 and then rip it back up again. I'm not saying they will do that, but that's one of the normal things that they have a tendency to do, and I'll leave it at that. I'll be right back. Okay, that wasn't the call, it was a different call. So the low here is 53. So as long as they stay above 416.50, she's still okay, all right? I'm here, I'll be right back. Okay, again, same routine, just back and forth. If they come down, it's 415.25. If they break the lows, which is 415.89, and if they bounce off 416.50, and they forget to bounce off. Now we'll see if this is one of those like I just described, come down, spike 416, shake everybody out, and then rip it back. And that will be a test if they do that. If they come down lower, we know the story. Now those traders that took a trade, took profit, probably flat at this point, maybe, maybe not, took a base hit, let's just say, all right? Could you do it again at 415.25? Yep. I might not be here, but should be able to. We would call that one the play it again Sam trade. Oh, there it is. 415.80 is going to be some initial resistance. Short term. There's two moving averages. Let me show you something. There's one here, right? This has nothing to do with the number. That's the hourly chart. And then you got one here on a 4-hour chart that's lower. And that one comes in at right around 414. It's like $1 lower, give or take. Just saying. Turns out to be a pretty decent down day for the tape. Down 35 points today in the S&P, $3.50 in the spiders. 135 points in the NASDAQ, 1%. There you go. Anybody take 415 and a quarter? Anybody take profit yet? Gave you 4 or 5 points, 3 to 5 points. Yep. Nice job. 415 and a quarter, Alan. Nice job, Thomas, Dennis, Ron, Shannon. Nice job. Mohammed. Okay. Well, there you go. I don't know if you booked any profit there. I hope you did. Let me show you something else too. If they don't bounce here and they don't get down $1 to that 4-hour moving average that I showed you, that's close also. See this? Pivot, rejection, pivot, rejection, pivot, rejection. Well, this one is the closest one to current price, and it has a high of 414.54, and that moving average on the 240 chart was, let's say, 35. So 15 cents lower, 20 cents lower. So that's a zone. And then I have a number down here, but that zone could come first if they don't bounce here. Nick, most people at this point are using, well, I shouldn't say most, I don't know. A lot of people are using the ES or the MES instead of options that they came here using, because they give you a better, they take away the time decay issue. And some traders use exchange traded products like triples or doubles. SSO, SDS is a double, SPXL and SPXS is a triple. Those are intraday products, don't hold them overnight. SPY, some traders choose the SPY. Some traders still trade options. Some traders options on futures. We have the whole gamut in here. You're welcome. So 415.25 worked, I would say. Where'd they get up to? 75. So they gave you 5 points. That's scalp worthy. A lot of people think a scalp is 2 points. I don't. My version of a scalp is 5 to 7. Sometimes we take a little bit less depending on the chart, the type of tape, but generally speaking, and those of you that have been around a while know, 5 to 7 is a scalp for us. That's the first trade. That's the first exit. The rest is trader's choice. So we're really looking for 10 and 15 point trades and more. That's really what we're looking for. If you be patient, you don't need 10 trades at 2 points. You need one of mine to equal the same 10 at 2 points, or 7 at 2 points, or 5 at 2 points, you know, whatever. I'm making it a point. The math was off on that. Remember the zone. They gave you a bounce at the top of the zone or halfway home. Traders, a lot of traders took this. A lot of traders got profit. Some probably got stuck, and then stuck because they didn't take profit, treat it as a business. And then they went to the bottom of the zone and bounced just the same. Okay, it's a zone of support. It's a zone of support. And they showed you that twice. The zone of support, quote unquote. Last call for alcohol. Questions, comments, complaints? Let's give it a wrap. I think that does it for me today. I'm pretty comfortable with how things worked out, even though it wasn't a great trading day. It was a pretty decent trading day. A lot of traders got 1, 2, even 3 trades, whatever it is. Okay, Robert. Doesn't matter if you missed the first one, you got the second one, you're good to go. You're welcome, Nick. I say this sometimes, and I don't like saying it, I don't love saying it, but I just can't help myself sometimes. Those of you that stick around, and those of you that are actually trying to learn, you have the desire and the discipline to learn, and you're writing stuff down that I talk about, and you're following along, and you're trying to follow as best as possible without doing your own thing, without doing what somebody else thinks or whatever. Those people have realized already, and some haven't realized what this is doing for you. In other words, the learning that's going on here, the market understanding that you're getting, you're not going to get many places, and we'll leave it at that. Nice job, Braun. 2 for 2. 3 trades for Jerome. 3 positive trades, right, Jerome? 3 in the money trades, right? Yep. Thank you. All winners. We got something for everybody. You do what you're comfortable. Not everybody is going to have the same exact trade on at the same time, but you can trade around the there you go. How you doing? And that's nice pop. See that? Well, that feels good. Very simple. When they started coming back down, we described it, talked about it. Most traders are out, flat, whatever, took a base hit. 415.25 is the, what did I say, quote unquote, play it again, Sam trade. All right. That's going to do it. I appreciate everybody. Don't do stupid stuff. That's it. Give it a wrap. If you're holding a trailer, that's fine. That's it. Don't short 416.50, you know, 2:30 in the afternoon. You have no idea what's going to happen. And, you know, the longer the day goes on, the less time you have. You're running out of time on the clock and you end up getting stuck. And then you realized after the fact, or at least you agree that you did something stupid. Don't do that. If you have 2 trades, 1 trade, 3 trades, whatever, be happy with it. Keep the money in your pocket and be back tomorrow in uniform, ready to go. You're welcome, Jerome. So we'll leave it at that. And we will be back tomorrow in uniform, ready to go. Enjoy the rest of the afternoon. It was a good day. We'll leave it at that. Slow day turned into a good day, and that's fine. Appreciate everybody. Appreciate your confidence in me. So I appreciate you, and we'll see you tomorrow. Thanks.